Welcome students. In this video, I am going to discuss the income tax calculation for a person, and we will compare the old tax and the new tax regime, and we will try to understand that under which tax regime the person will have to pay lesser amount of tax or can save the tax amount. Let us look at the example first. Mr. Banjara has a salary income of rupees 8 lakh. So here 8 lakh is his salary. He invested in 75,000 of rupees in the ELSS. So ELSS is the investment and the amount is 75,000 rupees. A part of that he also has invested in PF. The amount is 65,000 rupees. He also pays the LIC premium of rupees 10,000 here. LIC premium per year. A part of all these expenses, he has a premium for the family's health insurance, which is 25,000. He also paid the home loan interest of rupees 75,000 in the last financial year. Now we need to compare both the tax regime. So tax outflow in both the regimes. So before solving this problem, let us discuss the tax regimes. So here are the income tax slabs for the individuals less than 60 years. Here we are assuming that the person Banjara's age is less than 60 years. So if we look at the tax slabs, here the information is given based on the financial year 2023-24 and old tax slab for 2023-24 as well. AI means the assessment year. Assessment year will be 1 year ahead of the financial year, so it will be 2024-25. Now if you look at the no tax slab, no tax, there is no tax to be paid up to 2.5 lakh rupees. But for the old tax slab, it is only up to 2.5 lakh, but 50,000 rupees extra is available for the new tax slab. So up to 3 lakh there is no tax for the new tax regime. Now if we move forward from 3 lakh rupees to 5 lakh. From 3 to 5 lakh, 5% of tax is to be paid, but if we file the return, we will get that taxable amount back, or income tax return the person can avail. Here, if we consider the new tax slab, then definitely this tax rebatable amount is up to 6 lakh. And in fact, it has been increased in the last budget up to 7 lakh. So up to 7 lakh basically the taxable amount will be returned. So we can have a tax rebate up to 7 lakh. Now from 7 lakh to 9 lakh basically, according to the new tax slab, we need to pay, new tax regime, we need to pay 10% of tax, and then from 9 to 12 lakh, 9 to 12 lakh of income, we need to pay 15%, and then from 12 to 15 lakh, we need to pay 20% of tax, and above 15 lakh, it is 30% of tax. However, any person should start to pay the 20% of tax if his income crosses 5 lakh. So here, if the income exceeds 5 lakh, the person start paying 20% of tax as per the old tax regime. And if the income increases further and crosses 10 lakh, the person should pay 30% of the tax. 30% of the income as tax. In the given example, let us solve the problem for both the new tax regime and old tax regime of tax. So first we will solve the problem for the new tax regime. Under the new tax regime, we know that all the deductions that are available under the old tax regime is not applicable for the new tax regime. So here the taxable income is nothing but the income that has been given in the information, or it is 8 lakh. The entire income earned is the taxable income. We know up to 3 lakh there is no tax, but from 3 to 6 lakh we need to pay 5% of the income as the tax. So here then the deduction will be, what is the upper value? The value is what is the maximum limit? Maximum limit is 6 lakh. We will deduct rupees 3 lakh from the 6 lakh. So what is the remaining value? The value will be your 3 lakh rupees. Now on this 3 lakh, how much tax will be levied? 5%. So we will multiply it by 0.5 and the value will be 15,000 rupees. So 15,000 rupees will be taxable up to the income 6 lakh. Now next slab is 6 to 9 lakh. So up to 9 lakh we can have the tax rate 10%. But what is the amount of income here? Taxable income. Taxable income is only up to 8 lakh. So we need not to have the deduction from the 9 lakh, but we will deduct from the amount of income. So that is 8 lakh. So from 8 lakh we will deduct now 6 lakh. 6 lakh is nothing but the upper limit of the previous slab. So here it will be 6 lakh and the amount will be 2 lakh rupees. So 2 lakh rupees, on 2 lakh we need to pay 10% of tax because it is coming under the 10% of income tax. So 10% means 0.1. So if we multiply 0.1 with 2 lakh, the value will be 20,000. And if we add these two, the total income tax will be 15,000 plus 20,000 equal to 35,000. Now on this 35,000, sales of 4% will be applicable. So we will multiply here that 0.04 and the value will be 1,400 rupees. So what will be the total taxable amount or total tax outgo? That will be the taxable amount, that is 35,000 at here, plus the sales, that is 1,400. So it will be 36,400 rupees. So 36,400 rupees will be total tax outgo under the new tax regime. Now we will calculate the same for the old tax regime. Under the old tax regime, the deductions are applicable. Now here the ELSS 75,000 rupees, the provident funds 65,000 rupees, and the LIC premium of 10,000 rupees, all these things coming under the 80C. And under 80C, maximum deductible amount is 1,50,000 rupees. Now here if we calculate, if we add all these values, it will be coming as 1,50,000 rupees. Now apart of that, the premium for health insurance is coming as the 80D. So that is also deductible amount. And the home loan interest is coming under 24B. That is also deductible from the gross income when we calculate the taxable income. Under the old tax regime, the gross income is 8 lakh, but deductions, if we deduct here, it is 1,50,000, that is coming under 80C. So under 80C, what are the components I say? That is PF plus ELSS plus LIC premium. All this together is coming as 1,50,000. Now, if any person has more than 1,50,000, what will happen? Then also only 1,50,000, up to 1,50,000 we will consider under 80C. We will not consider the extra or added amount under this section. Apart of that, we do have this ATD, that is the health insurance. So here under health insurance, 25,000 is deductible. On top of that, the person has also paid the interest on the loan amount, that is coming under the 24B home loan. So here it is 75,000. Now if we add all these deductible amount or deductions, it will be coming as 2.5 lakh rupees. So 2.5 lakh rupees will be deducted. Now if we deduct 2.5 lakh from these 8 lakh, so 2.5 lakh from these 8 lakh rupees, the amount that is taxable or the taxable income will be 5,50,000 rupees. Now on this amount, the tax rate will be applicable. So we know that up to 2.5 there is no tax. We need not to pay any tax. But if it is above 2.5 lakh, then 5% of tax will be applicable up to 5 lakh rupees. So here the upper limit is 5 lakh. So upper limit is 5 lakh from the taxable income. Now we will deduct this income. So if it is above 5 lakh, then up to 5 lakh, what is happening? That we will calculate at this stage. So here we will deduct from 5 lakh 2.5 lakh. So the value will be 2.5 lakh. So here 2.5 lakh or 2,50,000. On that 5% of tax will be applicable. So it will be 0.05 or the value will be 12,500 rupees. Now on top of 5 lakh, how much amount will be the taxable income? Here 5,50,000 is the taxable income, and we will deduct from 5,50,000 minimum value of the slab. Minimum value of the slab is what? 5 lakh rupees. So we will deduct the 5 lakh. So if we deduct 5 lakh, we will have 50,000 rupees. So 50,000 rupees will be now taxed at the rate of 20%. So we will multiply here 0.2 and the value will be 10,000 rupees. So the total taxable income. So the total taxable income was 5,50,000 and total taxed amount or income tax will be 12,500 rupees plus 10,000, which will be equal to 22,500 rupees. And 4% of sales will be applicable. So for calculating the sales, we will multiply 0.04 with this amount. So if we multiply 0.04, the amount of sales will be 900 rupees. And total amount that will be the tax outgo will be the summation of these two items, and the total tax outgo will be 23,400 rupees. Now if we compare the values, if we compare the tax outgo for both the old tax regime and new tax regime, we will have these figures or we will have these values. You can see here, if the person who is earning 8 lakh rupees per year, if he is capable of investing in these sections, can invest some of their money or at least 2.5 lakh rupees in these following sections, then definitely the taxable income will reduce a lot, will reduce substantially, and under old tax regime the total tax outgo will be only 23,400 rupees. However, these deductions will not be applicable under the new tax regime, and under new tax regime the entire taxable income will be the gross income itself, which is 8 lakh rupees, and when we calculated the total amount of tax that we need to pay, or that the person here that we considered Banjara needs to pay, is 36,400 rupees. So here actually we have not calculated the return, but we only calculated the total tax amount that is to be paid at the time of filing the income tax. If a person can substantially invest in the deductible amounts, then definitely the old tax regime is better than the new tax regime. However, if the person is not capable of investing in the investment opportunities that are coming under the deductions, then definitely the scenario will be changed and we need to calculate the total tax outgo in that particular case. I hope the concept is clear. If you do have any question, you can ask me in the comment section. Thank you.